Chapter 8. Swimming Against the Tide. However bullish the overall sentiment, the market could not keep on rising indefinitely. And for all its logic, even the replacement cost theory had its limitations. The bulls were beginning to tire after a nearly one-sided rally that began in July and lasted up to mid-September, taking the Sensex up from around 1275 to a new peak of 1916. The market then began to flag, and over the next 1 month shed around 200 points. I saw this as a good opportunity to have another go at ACC and recoup my losses of the previous year from short selling the stock. The entire market had been baffled by the spectacular rise in ACC shares, and the short sellers who tried to predict its peak price had to pay dearly. That, however, did not deter the more adventurous from taking up the challenge, but only to meet with a similar fate. The stock had come close to hitting Rs 4,000 in early September, and even the most die-hard supporters of ACC felt it was unlikely to go much higher. Except Harshad. Nimish Shah, a close friend of Harshad's and as much of a bull on the stock as he, sold out at around Rs 3,500 a share. This was a clear sign that the stock was overvalued. What else could it mean when one of the finest investors on the Dalal Street decides to sell out in the face of strong demand for the stock? I told Prakash that there was good money to be made by short selling ACC. A player of Nimish Bhai's stature feels the stock is overvalued. What more do you want? I told Prakash excitedly, but he did not share my enthusiasm. Having seen 2 more Diwalis than you in this trading ring, I can tell you one thing confidently. No matter how big or accomplished a player, nobody can correctly predict the top or bottom of a stock, he said. I still went ahead and short sold the stock at around Rs 3150. Over the next week, the stock gained Rs 100 as the market as a whole started rising again. I met up with Sharma over tea a few days after I had short sold ACC. We discussed many stocks, and towards the end of our conversation, I casually asked him about ACC. The seasoned trader that he was, Sharma could deduce which side of a trade a market player was on from his very tone. You are trying too hard to be indifferent about ACC, which tells me that you are in a spot of bother. In case you have been stupid enough to short sell ACC, my advice to you would be to square immediately, he said with a wry smile. Okay, I will be upfront. I am short on the stock. How high can it go from here? I asked. Bhai says it can go to a level beyond anybody's imagination, Sharma said. And what is that level likely to be? I asked. You seem to be a bit hard of hearing. I just said beyond anybody's imagination, and that holds for me as well. Honestly, Lala, I don't think even Bhai would have expected ACC to come so close to hitting Rs 4,000. And it is very likely he did not know how high it can go from here either, Sharma said. My chat with Sharma made me a bit nervous about my trade, and I regretted having spoken to him. With the stock price showing no signs of weakness, I decided to wait for 1 more day before squaring up my position. That evening, I went over to Prakash's place at his invitation. There I met an elderly relative of his, a gentleman in his mid-70s who had been working at a broker's office till 5 years ago. Though not a trader himself, he had many interesting tales to tell. Soon the conversation veered to the bull run in ACC. I asked him if he recollected having seen anything like this during his career in the stock market. Crazy things used to happen in the market even then, he said, after mulling over my question. I remember a similar bull run in the shares of Tata, Deferred being classed of shares back then, sometime in the late 1960s. The stock went from Rs 30 to Rs 2,500 in a matter of months. A few players were made for life, but far more were bankrupted trying to short sell the stock, he said. The next morning I covered my ACC position at a loss, but I was still lucky considering the stock rallied Rs 300 over the next 3 days after my exit. While the bulls paused for a breather in October, there came another important development in the money market. New government bonds with higher interest rates took the sheen off the older bonds, whose price started to drop. The government bond portfolios of state-owned banks diminished in value. This triggered another round of frenzied trading in government securities by banks, as they tried to tide over the losses that ensued. Again, this passed unnoticed by the stock market, a wide section of which viewed the rise and fall in share prices in isolation. The bull market in shares resumed in January, with Hershad's purchase believed to be the driving force. Hershad may have been the biggest buyer in the market, but to say that he was single-handedly forcing the market up was to exaggerate his influence. Again, I am making this observation with the benefit of hindsight. Back then, even I was a believer in Hershad's power to make the market dance to his tune. Shallow as the market may have been back then, the daily traded turnover had risen to rupees 400 crore towards the end of 1991 to 1992. Hershad may have had the charisma to drive the market, but it was impossible for him, or for anybody else for that matter, to have enough money to dictate the market day after day. Even the most powerful of market operators can influence the market for at most a day or two, and that too only when they are on the same side as the majority. It may appear that the market operators are driving prices, when in reality they are just riding the wave. Stock market history is replete with players who went bankrupt after having made the error of thinking they had become bigger than the market. Somewhere along the way, Hershad seemed to have lost his sense of proportion. He was becoming dangerously overconfident. The beer cartel repeatedly attempted to fell him by short-selling the stocks he was long on. Not only did they fail, but they also suffered huge losses in the bargain as those stocks continued to spiral skywards. I doubt if there will ever be another bull run like the one in the market between 1 January and 2 April of 1992. During that period, the Sensex more than doubled from 1957 to the high of 45-46. Hershad's prophecy about ACC did come true. The stock touched Rs 10,500 on the day the Sensex peaked. It was indeed a price beyond anybody's imagination. Hershad celebrated his triumph over the beer cartel by actually feeding peanuts to a bear in the city zoo, and getting that recorded by the video magazine Newsstack. Some of the old-timers felt he had overreached himself by publicly humiliating his rivals on the way. Over the 3 months of the bull run, I made close to Rs 3.5 lakh. In the meantime, my relationship with Hershad had frayed. After that somewhat tentative start with him, we had begun to get closer. On a few occasions, I had got good deals for him, which he appreciated. He also trusted me enough to give me open-minded orders to buy shares for him, certain that I would not betray him. A couple of people in his inner circle resented my growing proximity to him. Sharma hinted about them to me but did not name them, but I had a fair idea who he was referring to. Once in a while I would go short on some of the big bull's favorites. This was faithfully relayed to him. I do not think he would have taken offense to that, though it did mean I was challenging his judgment in taking an opposite position. But he was informed that my loyalty lay with the beer cartel. Since I got along well with Manu Bhai and did some trades for him as well, some thought of it as more than just a business relationship. Then, on one occasion, I got a really poor price for a block of shares he had asked me to sell for him, despite my best efforts. His cronies told him that I was regularly ripping him off on deals. Earlier, I could pick up the phone and speak to him directly whenever I had a block of shares he was interested in. But now, a wall seemed to be gradually growing between us. He was either too caught up with the bigger things to spare time on a small fry like me, or he had begun to suspect me because of the tales he was being fed. Once I had a good block on offer and called his office to inform him about it. His dealer came on the line and told me that they would get back. They never did. 2 days later, I learned that they had done the deal through somebody else. This happened once again, and by now I was really mad at the shoddy manner in which I was being treated. It would be a long time before I would speak to Hershad again. The reckless manner in which Hershad was ramping up his stocks meant that he was pushing his luck too far. People say that had he slowed down a bit, he could have walked away a rich man without anybody the wiser, and perhaps the game couldn't have gone on for longer. I think he fell into a trap of his own making. Once stock prices rise to a certain level, you need increasingly bigger purchases to maintain the stock price. Else the price will simply collapse and trigger further selling as more people exit the stock in panic. I feel that even if the game had been prolonged, the end result would not have been any different, knowing Harshad and his internally bullish world of view. The big bull eventually ran out of luck in April. The starting point of his trouble was the government's decision to establish SEBI to supervise the stock exchanges in the country. The first major decision by SEBI was to ask brokers to re-register themselves by paying a higher registration fee. The powerful broker lobby, which until then used to set its own rules, did not take to the SEBI diktat kindly. In protest, many exchanges across the country went on strike from 16 April to 24 April. All trading activities came to a standstill. This made matters difficult for Harshad as he was counting on the payout from BSE to repay the funds he had borrowed from the State Bank of India, promising to buy them securities. While reconciling its books, SBI found that Harshad had not delivered the securities he had taken money for. The bank pressured Harshad to either deliver the securities or repay the money, and before Harshad could reach a settlement with the bank, the matter found its way to the press. That effectively blew the lid off the scam, and it was found that many banks and financial institutions were not holding the securities they had paid for, or were holding fake or forged bank receipts instead of actual securities. News of the scam sent the market into a tailspin, and the Sensex crashed to below 3,000 by the end of May. The size of the scam was initially estimated at a little over 4,000 crore. Later, the Central Bureau of Investigation (CBI) put the figure at over rupees 8,300 crore based on the cases registered. Harshad was not the only one in trouble. The scam tarnished many reputations on Dalal Street, ended many promising careers at the bank involved in the scam, and also ruined the lives of many junior employees who were only following orders. Later, a report by the Joint Parliamentary Committee probing the scam would say that irregularities in bank receipts had been going on since 1986, and that the matter had been brought to RBI's notice, but nothing was done about it. The report would also say that foreign banks in the country had not only been the major players in the scam but had also initiated the entire process of this. And in exactly the same way that Harshad had become the face of the biggest rally in the stock market, he was now made out to be the kingpin of the biggest scam to have hit the stock market.